So, welcome to this week's episode of Crap No One Tells You. With me is one of my good friends, Mike Thompson from Gouveia and Thompson Mortgage. We've known each other for a few years, so
Couple.
yeah, a couple now.
Yeah.
So, you've been in the mortgage industry for a while,
About 18 years.
only 18 years.
Yeah.
So, what is some crap no one tells you about the mortgage industry in general?
In terms of the borrower side of things or working in the mortgage industry or
Well, which one would you prefer to cover first?
question I wasn't expected to lead off with that. What does nobody tell you on the lending side of things? I just think that, what we're passionate about at Envoy and our team is education. And
Mhm.
I just think so many people right now are getting approved by an algorithm, such as, the online companies that you see out there, you see them on TV. And it's not really, when people buy their first house, they're excited and they're scared at the same time.
Yep.
And what we try and do is keep that excitement going, but also, low down the anxiety levels so they understand what they're getting into.
Right.
Got into this industry back in '05, and the housing crisis hit 2 years later. So right as I was moving up the ladder in our industry, the whole rug was ripped out from underneath us, and it needed to happen just because lending guidelines were way too loose. I mean, at that time, you could give a loan to pretty much anybody as long as they were breathing, and that's just not healthy. And things caught up with it, and that's what led to '08. '08, a lot of legislation happened. The CFPB was born. That means everybody in my role now has to be licensed. They have to pass a pretty rigorous test. And it's been good, in my opinion, good for the industry. We now have certain things in place, such as ability to repay, where, we can't give a bad loan to somebody like we could before the housing crisis.
Right. That all changed in the '08 regulation, all that stuff. Yeah.
Yeah.
I remember they were handing out mortgages like candy in 6 and 7 at least.
I worked, my first job was in subprime mortgages, and the highest rate that I ever gave out was 13%
On a mortgage.
on a mortgage. $400,000, but I was saving the guy about $2,000 a month because we were doing debt consolidation, meaning paying off a bunch of consumer debt that
Right.
he had. So the loan made a lot of sense. And when I was presenting this option to him, he's like, he asked what the rate was, and I told him 13%. And he's like, your voice cracked when you said that. And he's like, why is that? I'm like, because that's a high rate.
Because it's 13%.
50% on $400,000. But we reiterated the benefits that would happen of him doing this loan, that it's not, a home is forever, a mortgage is not. And,
Right.
and that's really what I try and tell people, especially, with what we're looking at right now. It's June 2022. Rates have pretty much doubled since first of the year. We're well into the sixes right now. And people understand that you're buying the house, but there'll be opportunities to get that payment where you want to be long term. We just need to wait and go through a cycle or two to get there.
So there's a couple of things that, like I said, because I've known you for a while.
Mhm.
There was something you said to me years ago, and it always stuck with me, is you have people that come up to you and say, oh, I got approved for a mortgage.
Mhm.
And you said, your question is always, well, what's the product? And I was like, what does he mean by what's the product? And it was the first time I realized that a mortgage isn't just a mortgage. Like there are I'm not going to say a gazillion options, but like a mortgage isn't just a mortgage, right? You have all these different lending options within the mortgage field, correct?
Correct. Yeah. So, just in the jumbo category alone, we probably have 17 different jumbo products, and each has its own certain niche. So for somebody that's maybe self-employed and they write off everything underneath the sun, they're maybe not going to our investor. But we have things such as bank statement loans. We have asset depletion loans. So we have a lot of different products out there that sort of allows people to find the right mortgage, so to speak, for themselves. And to me, a mortgage is simply just a payment.
Right.
And it's finding the right vehicle that allows that payment to be within the budget that they can afford.
So like these traditional, I want to call them myths of, oh, you need 20% down for a home. You need, like, people have these preconceived notions of what a mortgage is. And one of the things I learned from you over time was that that's just not true at all. Like there are a ton of different options out there if you find someone that you can work with. Like I remember you got me into my first home after 4 banks had told me there's no way you can get a mortgage. I know you're,
We
you know,
we did it.
but it was the same thing through some of your education. You always said, getting in is the most important thing because once you're in, you're in the game. And I never understood that until I was in,
Yeah.
right? Like I went from having nothing to having a house, and all of a sudden my house was building equity. And then all of a sudden I had a tradable product, so to speak. So, like when you talk to someone for the first time, like how do you pre-qualify them for the right product? Like what's the process? I know it's going to be a little long, but like not everybody
Yeah.
is the same way. Like you go to Bank of America and they try to squeeze everybody through this one product. You guys don't do that.
So in a nutshell, pretty much all lenders look at three things, and that's income, credit, and assets. Um, I start back with, hey, have you ever talked to a lender before about buying a house? Because to me, that's where you start. And it's starting with, why do you want to buy? How much do you want to spend? What's your target amount? What are you paying in rent right now? All those things go into ultimately what type of loan we're going to give them. Again, we're not just, let's say, shoehorning people into products they can't afford. We try and really fine tune and customize the mortgage to where it's exactly what they need for at that point in their life. Now, down the road, as incomes go up or maybe credit improves, we may readjust or refinance that mortgage into a better long-term product. But for the most part, we try and hit the nail on the head the first time. But there are some people with maybe credit scores that aren't where they would like them to be to buy their first house, where we're maybe putting them in a government loan such as FHA just to get them into the house, knowing that, hey, if they follow the steps after they're in the house to maybe work on credit or declare more income, those types of things, then we're going to be able to get them into the better long-term mortgage product that they want to have for as long as they're going to have the house. So that's what we try and do. So, to go back to the original question, we all look at income, credit, and assets. I want to learn a little bit more about the individual, where they're at in life. I do take a holistic approach to things where if they want to put 20% down on a house because that's what mom and dad said to do, but they don't have, much put aside for retirement, then I'm going to show them. And I have some phenomenal software that allows that, where, hey, if you put 3% or 5% or even 10% down, reinvest the difference, then here's what that could mean 10, 15, 20, 30 years down the road. And that's what I love doing the most.
Yeah, I think people kind of, because of these myths and what we're taught, don't realize that when we talk about homes being investments, there's also other investments, and
Mhm.
being able to balance those things and show people that, I mean, it's got to make a huge difference to someone that's coming for the first time and really is basing all their stuff off of, well, here's what my parents did, right?
Well, they took X amount of years to save all this money, and then they're finally going to put it into a house that's going to appreciate historically, let's say 5% or less. The last couple of years have been off the charts with home appreciation,
Right.
but for the most part, and money's been so cheap the last, let's say 10 years, that for them to take money out of the market, which could be growing easily at double digits in the last couple of years, to put it into a house at, let's say 3%, 4%, 5% money. I just think that there's other things that they should consider before they put all their money into a house.
So you're not like Bank of America that just wants to do 20% and
Um,
let's shoehorn you into this into this product regardless of whatever else is going on.
if there are two opposite ends of the spectrums in the world, it would be Bank of America and Wells at one end, and Envoy and Mike Thompson and Steve at the other.
Okay.
Yes.
So so what are some other things you think, let's say you're just graduating high school
Mhm.
and you're trying to put together your long-term plan.
Mhm.
What would you say should be like the first thing someone that's looking to get into home buying should look at? Like what's the process they should be aware of? Like yes, credit scores, yes, things like that, but how do you really get started in this investment and start buying your first home? And
So I think step one is to sit down with a true mortgage originator, not just go online and apply and see what you get approved for. So I think sit down with a professional such as myself that truly has your best interest in mind, that understands all the different products that are out there, understands sort of how the world finance and economy works, understands that how to look at a budget, how to establish a budget, how to identify whether or not it's the right time for you to buy, because there's some people that they want to buy a house, but the timing's not right. And I'm a firm believer, and I try and teach our team this, that, people buy homes when the timing is right.
Mhm.
And for some people, it's not right now. And we need to maybe work on credit, or maybe we need to work on the money they have saved. And that's fine. And I helped a lady last year, 7 years it took to help her buy a home, but she's in her home. And, I still talk to her about her every 6 months, and she's ecstatic because it took that long to get in there, but she's finally a homeowner.
So that brings up the question of, when is it too early to start talking to someone like you or a mortgage person?
I,
Like,
I,
should you
I,
start a year before, 6 months, 2 years, 5 years? I mean,
I think as soon as the thought crosses your head that, it's time to at least talk to somebody that understands mortgages and finance, and how they work. Cause it's never too early to have the conversation. So right now I'm in probably 70% of our day is spent coaching people or educating people to get them ready to buy their first house. And for some people, they're ready to go and they're out looking right now. But for some others, hey, they want a payment at a certain amount, and maybe we need to get their credit score up to a certain FICO level, or maybe they need to save more money to put more money down to get to a payment level they're looking for. Those are all things that come into play. But the sooner I can talk to somebody, the better, because then we can put realistic expectations on when they can buy. And a lot of people, they're just surprised that they're ready to go sooner than later.
yeah, I can vouch for that after having gone the traditional route that everybody assumed was the route. And then when you told me, hey, you need like 90 days worth of this and you should be good to go. And I was like, what?
It's funny. I forget that. I'm not sure if I forget or I block it out. That first loan that I got, it's one of the,
Yeah, that first loan.
yeah.
Well, we've done a few since.
Yes, we have.
But yeah, and just to give people my backstory, like, I was self-employed. My tax returns were a mess. Like, I really didn't have anything that any traditional lender was looking for. And what I got from you guys that nobody else was willing to give me was that, well, here's the process you need to go through in order to qualify.
Mhm.
And like, as soon as someone gave me the roadmap, I was like, oh, I can do this. Like, why didn't anybody tell me that this is all that was needed? And it was funny because, between the combination of you guys and then my CPA kind of helping me guide through it, I've told you a million times, I wouldn't be financially where I am today if it wasn't for you getting me into that first home.
Yep.
And it was all because of that one little piece of advice that was like, just put yourself on the payroll, right? Stop taking an owner draw and put yourself on, give yourself an actual paycheck.
Yeah.
And I was like, I never even thought of that, because that goes against all the traditional small business advice that you get.
Yeah. There's the self-employed individual still in this market, still underserved, just because, especially post-COVID, there were things that happened during COVID that the guidelines are sort of, they're a roadmap in terms of how we're going to approve somebody to do a loan. But a guideline normally doesn't take into effect a pandemic. So when the pandemic happened, that created a lot of challenges for the self-employed that we're still trying to unwind that. Because if you take a look back and let's say we have to use 2 years of incomes,
Right.
21 and 20, that's the height of the pandemic. So there's a lot of people that I'm working with right now where, hey, I helped them or sort of guided them or made suggestions how to file 21. I'm not a CPA, but also once they file 2022, then they're going to be good to go to get into a home.
Right. So that brings up another interesting question, because I also happen to be your first mid-COVID loan. I was the first one that went through your, like, literally pandemic hit, and 6 days later we were closing on our refinance.
Some great milestones. Thank you.
But so that's one of the things that always fascinated me, was with all the changes, because you're looking at changes in not just self-employment, but people were laid off in mass during COVID. Like, people had to take, businesses got PPP loans. They were paying a portion. Like, the employment market was a mess for like 6 months. Has there been anything that, I mean, I know it affected it, but have they been able to work something out where they take that stuff into consideration? Or is it just kind of one of those, well, we're just going to have to wait it out?
So lending is basically hedging risk. And when the pandemic hit, everything was out the window because we didn't understand what was next.
Right.
So that, when you had PPP money, is it have to be repaid back? Is it going to be forgiven? A lot of those things have sort of worked themselves through the system.
Okay.
So it has become a little bit easier for the self-employed. But still, the sooner I can talk to somebody that's self-employed, the better off it's going to be, just because I can understand what product I need to put them into. The self-employed probably have some of the most options that are out there. So, we can qualify them off tax returns. We can qualify them off of bank statements, business bank statements. We can qualify them in some cases off of asset depletion or other physical assets they have. So we do have a lot of options out there for the self-employed. So anybody that's self-employed thinking about getting into real estate, great introduction. We also have right now for those investors out there, an investor cash flow loan.
Mhm.
So as long as the rents cover, or I'm sorry, as long as the rents cover the mortgage payment, they're approved. There's no income documentation whatsoever.
Okay.
Now the rates could be a little bit higher and the down payments could be a little bit higher. But for some people that want to get into real estate and they have the money,
So basically, if your mortgage is lower than your rent, you're technically qualified.
yes, it's what we call what's a non-QM loan, which basically means non-qualified mortgage. It's not necessarily subprime, but there's some similarities to it, and it's just a way that they become very, very popular in the last, let's say, 18 months.
Wow. I never even heard of that. So to kind of switch gears, there was once again a conversation we had, something you actually encouraged me to do. I wouldn't say encouraged. You guided me in the thought process. Is originally when me and my wife bought the house, we were both on the deed, we were both on the mortgage. And this was, like I said, right before COVID hit. We were having these conversations. And something you brought up during the process, very subtly, but I took the hint because sometimes I'm good at taking hints, was you said, well, why don't we just qualify her for it? And I was like, well, what do you mean? And you told me, well, she could be the only one on the mortgage, which frees up your lending ability. And it was one of those fascinating things that since then, I've now educated me on the subject. But why can it be smart to qualify and get the mortgage only under one person rather than getting it as a married couple?
So it just gives you choices down the road. So again, it all goes back to at least how we operate, is that initial first conversation is where we want to sort of turn over all the stones and figure out, okay, where are you at in life right now? Where do you want to go and how can we help you get there? And if somebody says, hey, I want to buy my first house, but I want to turn this into a rental in the first 5 years, and then they want to, buy other rentals, then I may have some different strategies in terms of what type of house to buy for their first. Maybe you want to consider a duplex. You go FHA loan, and it requires a 3.5% down payment. Whereas if you did an investment property loan, it's a much, much higher down payment. So if you bought a duplex, lived in one side of it through an FHA loan, then essentially you could vacate your half, turn that into a rental. Now you have 2 units that are providing rental income, and then more importantly, hold on to your capital to be able to go buy your next property X amount of years down the road. So there's a lot of creative ways, once I understand what somebody's looking to do, that we can sort of guide them in terms of, hey, do this, don't do that. Did you think about this? And sort of make sure that we're not putting them in a position that we can't get them out of. And so in your case, you said, hey, I'm not sure. I want to have options. The best way to.
We were looking at buying like a second summer home or a, property vacation home at the time, which is how that conversation came up.
Yeah. I totally forgot about that, but yes. So in that case, it kept options open, which I think options are a good thing. So for a lot of people, especially they're buying their first house, they're recently married or maybe not even married yet. I will absolutely explain to them the pros and cons of doing it in both your names versus one of your names, especially if you both can qualify on your own.
So I'm assuming that not every mortgage broker out there has the same understanding of the real estate market you do.
I think there's a lot of good people doing what I do, but there's also some people that maybe don't do things the way that we do.
Well, so it's because you guys do an entire educational series, right? So you guys were actually the first mortgage guys ever that I heard of that support I believe you guys support a local nonprofit that helps educate people about home buying and how it works as an investment. And it seems you are really you're truly invested in getting people into a house.
Yes. Yeah. So we do some work with Montgomery County Partnership for Housing, where they have a uh, a network of people that sort of represent every aspect of housing. So, insurance, title, realtors, lenders are all there. And also some government agencies that have the free money for certain demographics to be able to buy the first house. So we do a lot with that. And then at our new office in Lansdale, uh, the first Tuesday of every month, we're doing a home buyer seminar where anybody can come in, learn about buying their first house. We do a lot of stuff with different real estate teams. We'll do a lot of stuff with um, property management companies, which a lot of people find that a little bit odd, but we do work with a lot of property management companies with home buyer seminars just because um, it's a natural fit for us. If they're renting right now and want to buy, that makes sense. But more importantly, for the property manager, we can tell them who's ready to buy and who isn't.
Okay.
So if Susie's thinking that she's moving out in a year, but after I look at her and Susie's not moving out within a year, then that's good information the property management company could use to determine, okay, what's my turnover going to be in the next 12 months?
So when you guys say you have a team around you, it's more than just whoever's in your office. Like you're working with a bunch of people from a bunch of different industries to get a much better understanding of, well, how the market is, how the lender
Yeah.
is, how like it's,
Yeah.
I don't think people realize how intricate this process really is.
Mhm. Yeah.
But it's fascinating when I talk to you guys, I'm always like, wait, you do that? Like you educate people? Like,
But it's not that. Like it's not just the first time home buyer that needs advice. It could also be the couple that's about to go through a divorce, and they have this marital asset. They're not sure how to divide it up, and they don't realize how making decisions when they're starting to draft, let's say, their property settlement agreement is going to impact what they can or can't do when one of them wants to go buy a house down the road. So every industry sort of has its own little niche that we try and educate on and make sure they understand, hey, if here's the consequences of you doing this in a rush, let's think it through and make sure that we're doing it the right way.
so now you're talking about actually educating them during a sales process of a current home
Yeah,
rather than the purchasing of the next.
correct. Well, everybody needs a place to live. So when
Well,
people get
well,
divorced,
yes.
they typically head different directions.
Right.
And if they own a home, then we got to figure out what's going to happen with that property. If they don't own but if they want to buy, uh, there's some times where we want to, let's say, get the mortgage or the purchase done before maybe the divorce is finalized.
Okay.
So there's different ways that we can handle things to make sure that everybody ends up where they should end up.
Okay. So, well, I keep learning.
Mhm.
So if there was one misconception that you think is very common out there that people should kind of ignore, what would that be other than the 20% down needed on every time you buy real estate?
Um, that I can't afford it, I would probably say is the number one thing that I see that I can't afford to own a home.
So,
And there are a lot of programs out there that don't require down payment. There's a lot of government programs out there that will give you the money for your down payment or for closing costs. And then there's also something called seller's assist that we can always work on negotiate. It's a little bit harder in this market based on the seller's market we've been in since the pandemic. But for the most part, um, I think everybody deserves to own a home when the timing is right. And my job and my team's job is to help identify when that time is. We
and
just want to make sure that we're the lender when it happens.
and people often don't realize that they're ready before they actually think they are because they haven't talked to someone like you yet and don't know of all the options out there.
Yeah.
Makes sense.
We're doing a program right now to a large nursing home facility for their employees.
Mhm.
And we're going in there talking about home ownership education and home buying process. And a lot of people are like, why would you spend time doing that? It's twofold. One, everybody deserves to own a home, but also this specific employer, a lot of their talent is coming from outside the area. So, gas prices are up. So it's getting more and more expensive to get to work every single day. Um, you know, a lot of these people are coming from outside the city. Crime's like crazy in the city right now. So we're showing people how they can buy closer to work. And what the sort of idea to the employer was, if all of a sudden, if they own a home near work, they're probably not going to change employers as often as they would have in the past.
Correct.
And that really was our process. And so we're going through our first couple waves of talking to employees, and a lot of these people are chefs and cooks and housekeeping and what have you. And they just didn't think that they were in a position to buy, but they are. And it's awesome to see when somebody's like, really, they sit there and you're talking to them the first time and, a week later, hey, you're 100% underwritten approved and you can start looking for a house. And, that's sort of like, I love doing what I do, but that first time buyer is still what sort of gets me the most excited.
Especially when they think they can't do it and then they realize they
Yeah.
can.
Somebody's first generation to ever buy a home.
Yeah.
That's a good feeling.
Oh, I bet.
Yeah.
I remember buying my first, and after basically being under the assumption that I would never be able to buy one.
Yeah.
So that's really cool. So anything you want to squeeze in before we call it a day?
No, I appreciate the opportunity to be one of your first guests here at the, what's the name of the podcast?
of the crap no one tells you.
There you go. Good.
But so thanks a lot for coming, and we will put some links to your company and the home buying seminars, the stuff that you talked about will be in the bios.
Awesome.
Thanks a lot for coming.
Thank you.